All right, traders, it is the 3rd of January, 2017. My name is Jameson. Happy New Year. And let's take a look here. I recently posted a quick pick here on oil. This is a weekly vertical bar chart of a WTIC. And it's just my 2 cents saying that it's not overbought. And I got a couple comments there. I got a couple DMs. And I've watched the feed here on FinTwit, and it's been of profit taking within the industry and the sectors. And increasing of shorts, which maybe I'm following some of the wrong people, but it doesn't make any sense to me. And we're not going to look at market profile. Like literally, let's just look at this simple chart, and we're going to ignore these labels. But let's take a quick look. So if we come back here, I'm just going to show you that I put a blog here on November 10th, so you can skip through this stuff. I mean, this is a pretty raw chart. Like we're just looking at trends. Like here's a bearish descending channel. We're transitioning to a bullish ascending channel. That's bearish to bullish. We can see this expansion in volume. What I was describing here, this expansion in volume, is that prices are actually declining. Yet there's this gross expansion in volume. So from all things being equal, this great effort should have drove prices lower. The fact that this large selling effort, this expansive selling effort, did not push prices lower and break this lower trend line, I had to ask, well, why didn't all these sellers break the lower trend line? Well, it's because sellers weren't in control. Well, if sellers weren't in control, then what accounts for that? Well, buyers. This is a bullish accumulation. They took this liquidity and they bought all the supply from the weak hands here, from the uninformed, and now we're kind of rallying through there. Like this is a lot of risk that was purchased and absorbed. I really doubt that they're going to quickly take profits just through here. But I use horizontal point and figure counts to measure price objectives, not to give me a target to hold my trade for, but to give me an idea of what the potential risk reward is, because you want to consistently, I like personally consistently have a 3-to-1 risk reward ratio. So what we have is that we have a couple consolidation periods. So I have a little count here. I have another count here. If I come back to the chart, and this is the chart that I shared, this is the consolidation period that we're going to look at here. And then the second one would be the entire schematic that's here. Now, before we move into that, we can see that we had this bullish ascending channel. We can also see that prices were trading in the middle of that range. Obviously, I would assume that all things being equal, because prices are going nowhere, supply is equal to demand. And there's an equal amount of shorts as there are longs. Now prices are breaking out. Somebody is wrong. Well, I'm going to say that price is right and shorts are wrong. Now, what would be the normal thing to do to realize that you're wrong, close out your trades, and then look for a better entry that offers a better risk to reward ratio? And based on nothing else other than the trend line, that better risk reward ratio for shorts would be on these upper trend line here. So I understand that there's probably, again, there's some profit taking here. I really think that reflexive even profit taking is a little too early, as there's really no resistance really through here. It seems at the present time, maybe I naively think so, but it would seem as though prices can continue over time, not just vertically, but to continue at this angle of advance here over the next month or so, into this upper trend line. And I don't think that's unreasonable. And as we do so, I think naturally the risk that we have for losing our gains for longs increases because we're trading the resistance. The natural response there is to take profits in the resistance. Like that's buy low, sell high. What's high? High is defined by the levels of resistance that we're trading into, and then at this point in time, that's about 67.5. Now, also, when we approach that time, we're going to see some traders begin to short. Now, the problem that I have and what gets me excited is that we're seeing people short through here, and that's fine. But what is your expectation? So if traders are shorting through here, and if prices continue the resistance and you continue to short, what is your reward? I mean, maybe prices will, maybe they'll break all the way back down to the lower trend line. But if there's just a mean reversion back to these upper trend line or the resistance to this bull flag into 60, you're going to short, and then what are you going to do? Like, prices break back down, and then you're going to accept a small loss or take, or break even as we have, as we're here, and just assume and hold this for risk when you could put your money into something else. It just doesn't make any sense to me. So if we look at this consolidation period that we have here, we go back to the blog here real quick. Here's a horizontal point figure count. I'm not going to tell you how to calculate it because it's written in here in crayon. Take some time and learn how to do it. Don't be a jackass. But the amount of time spent consolidation here gives us a $72 price target. That $72 price target just happens to have a confluence or correlate to the upper trend line of the supposed ascending channel. It's actually a little bit higher, which I actually like that, because if I really think that there's a good short position, or we're going to see some, a decrease with some velocity, it'll be following overbought conditions. And overbought conditions relative to this trend would be in an environment that is above the established trading range, which again is this is a 2-year now trading range. So I would think that there's a strong potential that we trade into this $72 area. Prices would be overbought. That seems like a good risk-reward ratio for a short. And then I would actually short that probably back into a mean reversion into this, $60 range. Now, if we look at the larger kind of accumulation here. So if we look from the 2015 to 2017 to 18 where we're at, which is all of this, now we have that price target of $90. So just from mid 2015 to then, there's our $90 target, and then the entire count will give us a $110 target. So again, there's a lot of, when we look at a risk reward, the reward looks much better from a long perspective. So maybe I'm being a little myopic with my dismissiveness for short entries, but I just see much more upside in the long term. So I don't feel that I need to reflexively take profits on some of the energy trades or within the industry that we have. And I do kind of judge others thinking, hey, maybe they're taking profits a little too quickly. And I certainly am. I get a little excited when I hear people just say they continue to short because maybe I'm missing something. And if so, please share it. But it just seems a little foolish. Well, those are my 2 cents here in oil. I see more upside. I would expect some lateral trading. Once we hit 65 to 67, we may not just break back down. We may work off, matter of fact, we may trade in the $72.50. And instead of just dropping, we may trade laterally for months until this ascending channel catches back up. How would that be for shorts? But hey, I don't want to get on my soapbox any longer than I already have. Those are my thoughts. That's my 2 cents on oil. I hope you found that helpful and informative. And we'll go from there. Good luck this year, guys.